Hello everyone, welcome to this Mules podcast from Feedzai. I'm Mike Nathan, I'm the Global Solutions Consulting Lead here at Feedzai, and I'm very happy today to have Tony Craddock from the Payments Association here. How are you doing, Tony?
Really well, thanks for being here. It's an honour. Thank you for asking me.
Fantastic. I'm really looking forward to our conversation. Obviously we will have a theme of money mules, but I'm just kind of always very interested in people and how they fall into the roles that they end up in. So I think particularly in the fraud space, nobody really chooses it. They always fall into it. I'm curious to understand, how did you end up where you are now?
So I'll give you the back of an envelope summary rather than the full encyclopedia. I'm a community geek. And through my whole career, I've just been fascinated about how when you bring people together in groups, they can do stuff that is really extraordinary. And so I've set up a number of trade associations over my time, and Payment Association I set up about 15 years ago or so, and it's just grown from literally 4 members to over 200 now operating here, and in fact with additional 70 in Europe and about 50 in Asia, under the same principles around collaborating to make the world a better place through payments. And kind of that's my thing. I happen to love payments too, but first and foremost, I'm a community geek.
No, mate, that's really interesting. And I think, there has been a huge transformation in payments and it's pushing the boundaries. And I think in the UK, we really do kind of lead the way in a lot of the initiatives and how they actually kind of take place. And globally, they often look at the UK as an innovator. So what's kind of your view on where we are right now? Do you think we're at the forefront or we're behind other countries?
So look, it's a strange thing. We have a particularly consultative and collaborative culture here. We trust each other first and then verify second rather than the other way around. And we also are very open to co-creating solutions to particular problems, which is also quite unusual. You go to some places, bigger countries like the US, it definitely doesn't happen that way. The other thing here is we've got sufficient critical mass. So with this number of players in the marketplace, there's several thousand fintech companies, of which 50% or so are payments related, that lends itself alongside the collaborative instinct to be a place where good breakthrough thinking can happen. I think it would not be fair to say that we are at the forefront anymore. We have on occasions. We're still doing some great leading edge stuff. I think we have a chance to be more ahead than we currently are. But it's not about being ahead or behind. It's just about being what's best for solving the problems facing the market, best for bringing the new innovations to consumers, best for balancing the kind of the profit need with the social purpose need, which is a strong theme of the payments industry.
Yeah, and that's fantastic. And, having been a fraud professional for the last 15 years, worked in banks and now working vendors and now at Feedzai, I'm kind of curious, does innovation lead to, I want to say exploitation, because I guess that's a kind of a theme that you kind of see. We saw in the UK with the advent of open banking, and then that became a channel that fraudsters might target. Do you think that's just something that always takes place, that the fraudsters will often try and work out ways to break a system to try and do some fraud when something new is done?
Absolutely. It's a phenomenal industry. It attracts the best talent because there's money to be made, often quite easy money to be made through being a criminal in fraud and the associated crime of money laundering, which is often given less press, which I think is equally, if not more important.
Interesting. And that thought process is something that I've always kind of debated, which is if you think of money mules as the vessel account of the receipt of stolen goods and an essential component for the fraudster to control to actually get hold of the money, do you think it's a fraud or an AML when you have a money mule?
Well, without the laundering of the money to a place where it goes from being dirty to being clean, which of course is why it's called laundering. Without the laundering, the money can somehow be recovered or the person can somehow be traced. So it's a prerequisite to most successful frauds. There's a series of multiple accounts that the money goes to very quickly from a sophisticated scamming operation, and after a little while you can't see where it's gone, and that's a whole thing. So the two definitely go hand in hand, and when you look at the numbers, the volume of money that is moved through the laundering system is 20 times as big as the money that's laundered, that's defrauded in itself. And of course, that money is also then used for to inflict other crimes, whether it's terrorist financing or whether it's prostitution or underage prostitution or drugs, and these are industries which are dependent upon the free movement of cash using the money laundering system. It gets less press because of fewer victims, and it also gets less press because right now the banks and the card issuers are the ones who are having to pay the money that it costs them this year in this year's financial accounts. Money laundering is kind of a bit vaguer, but let's not forget it. It's definitely there, and there are some good organisations that are doing a good job of trying to track and trace the money as to where it's going.
I kind of always wonder this, is like, if I'm a criminal, I just have a lot of sidelines, really. I don't just say I only do card fraud, or I just launder money, or I just do prostitution, or I just do people trafficking. I do all of them. So do you think actually what sits behind it, even though we kind of distinguish money laundering and fraud, it's the same people doing this kind of illicit activity? It doesn't really make a difference.
It's still financial crime. So it's under the banner. They're both financial crime activities. What is fascinating to me, it's not exclusively the case, but often is the case in banks, is the processing of illicit funds, money laundering, is handled in a different department to the fraud department, which I must say I've never understood. I did speak to a global bank this morning, and they assured me that it was all under one banner, and that's where learning feedback loops take place, and you can spot things happening. This is all about spotting patterns, and it's particularly difficult with authorised push payment fraud, because fraud that's used with simply stealing credit cards or trying to intervene in sort of invoice-related fraud, for example, it's a little bit easier for a specialist firm like Feedzai to deploy its expert technology to solve those problems. With the sort of fraud that we're talking about here, where there's a series of often pretty innocent parties involved, with both sending as the person who's being defrauded and receiving, which is the mule, often they're pretty innocent. So it's much harder to spot the patterns, and therefore having these departments in the same division within a bank makes a whole heap of sense.
Fully agree, and it's kind of interesting. You know, they're looking at the same problem with two lenses, and Money Mules for me is the bridge between fraud and AML, because it's, as you just kind of articulated, it's a bit of both problems. Do you think now that there's so much focus on scams in the media, the regulators, everybody's talking about it at the moment because it's a big prominent fraud type, do you think that means that mules become more of a fraud problem and get the focus that they need?
One would hope so. And I think there's multiple layers of solutions that the industry is talking about at the moment. One of them is very much around education, and I've got 3 children. They've all come out of university in the last few years. In fact, one's still there, and we often talk about how susceptible they may be because they are themselves relatively vulnerable. They are likely to be short of cash. They're likely to be susceptible and influenceable because they haven't got a big dose of the smarts, perhaps. Don't let my kids hear this podcast because they'll come and slap me around the back of the head. But the point being that these are individuals who themselves are more susceptible. So is it I think your question was, are money mules and people who are handling illicitly obtained funds now within the perimeter for consideration as part of the solution? I think yes, they are. I think they are.
Yeah, and I've kind of been looking at money mules probably for the last 15 years, and it's something that I am very interested in because, you know, I figure that if you it's when you're trying to solve a problem such as fraud, you have to hit it from different angles, and that's one angle where the money goes, and that's a very key one. It doesn't really matter whether it's an account takeover, whether it's a scam. The money has to go somewhere, and that's kind of the principles there. I'm going to try and address the elephant in the room, which is obviously PSR's kind of view around liability, particularly between the sending and receiving banks, and some of the focus on reimbursement of scams. I'd like to get your view on that in terms of what you think of the proposals, because I'm going to put this in context. This is quite new. This is quite a different way of doing things. To me, it's actually, the world is probably watching right now to see what takes place. So I'll welcome your view on
it is
what
a
your
fascinating scenario, and let's not forget, none of the comments I make and the views that I share are personal. I do know that everybody's trying to do their best, that everybody recognises there's a lot of social harm being done, a lot of what do the regulators call it, consumer detriment, and that it's a pretty difficult situation we find ourselves in, and I admire the regulators for innovating in that respect. They're not doing it the way in which everybody does it. They're trying different things. So let me give you an example. Consumer duty. Consumer duty is an innovative solution to a problem that the FCA has recognised around the degree of customer centricity amongst its 57,000 regulated firms under the FCA banner. And they've come up with a general approach, which is, let's not look at the activities that you're deploying in the organisation. Let's look at the outcomes from those activities. Now, in that short sentence I've given you, and the reason I use short sentences is because I don't really understand very much about this, and it requires me to speak in short sentences to make sure I know what I'm talking about. And in this case, it's very, very hard to always prove outcome before you act. It's very hard to know whether if I go in to a room with a bright shirt on, whether it'll have the desired result. I can perhaps do a sub-sample. I can test it out in advance. I can perhaps look at other examples and see whether that's working. But it's very, very hard whether people are going to say, Tony, not another pink flowery shirt, please. Somebody has a much more welcoming approach. So you deploy that across the whole of the 57,000 firms and the multiple sectors, and then you deploy it in payments. It's very, very hard to see what the impact of these changes are actually going to be. So we move ourselves into talking about the PSR's policies announced in the summer, of which there are multiple. They've done great consultation, 2 consecutive detailed consultations. They're going through the process of doing another one now, trying to get some feedback. The answer is who knows. Our views are there are 3 areas where there is a problem with the PSR's declared policies as of summer 23. The first is to do with the decision to shift the liability for the fraud repayment, should I say the reimbursement of the fraud, to shift the responsibility 50% to the issuing account holding bank or account issuer and 50% to the receiving. Now, you could say, well, why doesn't the receiving bank incur 100%? So that's one view. You could say, well, if the money mule has clearly obtained fraudulent funds and it's proved to have been fraudulently obtained, then surely the bank running that person's account should be culpable and they should reimburse all the money. The way in which we traditionally do it is the person who's sent the money from the innocent account is the account holder that reimburses the money. Now they're splitting it 50-50. Interesting. Nobody else does it that way. So what's the likely effect? And what we've tried to do as a trade association, we've tried to think through the what-if scenarios. And we're concerned on a number of fronts as to what happens if you incur significant costs as the receiving bank account issuer. And what happens in that situation? You're guaranteed you've got to reimburse the money within 5 days, unless it's seen as being grossly negligent. First of all, what is gross negligence? That's not been defined yet. That needs to be defined. Secondly, what happens to, for example, an e-money account issuer? It has set up its business model on the basis of certain commercial parameters. The reimbursement of fraudulently obtained funds is not within those boundaries. It's likely to be obliged to repay that money. It's likely to result in a whole heap of companies going out of business. Now, that in itself is not such a big problem for a big bank because they don't like competition from these small companies. Of course they don't, because they're stealing their market share. However, it does diminish the degree of competition in the market, and we think competition results in innovation. Innovation attracts investment, it attracts new customers, and it delivers more value to the end user. So we fear the consequence of this is less choice for the consumer, higher prices, and less competition, and therefore less value for the end user. So we'll have we'll have the opposite effect of the one we thought we were going to have. We thought we were going to protect more consumers. In the end, the consumers will get less value from their payment services.
I kind of want, you've brought up two very important themes there, and I kind of want to separate them. One is kind of reimbursement and one is kind of liability, in terms of reimbursement paying back the end customer, and liability as in the sending receiving banks. We start with the liability. I think part of the challenge that we've had, and I've seen this globally, and this goes back to money mules, is that typically more newer organizations who are, maybe unicorns getting up to, their growth measures are measured on how many customers they onboard. They pride themselves on having very seamless processes to make it innovative, and the challenges that you have around that. The unintended consequence, I fear, is that you originate more money mules. Because if you look at the demographics of mules, it tends to be younger people, students, and these kind of people who would sell their accounts potentially. If you know the controls are lower around onboarding them, if you're a mule herder who's purposely opening these accounts, you would probably target that organization more.
Yes.
And then the problem is the sending bank, they have a challenge that the other wherever somebody's onboarded someone, maybe even partially knowing there might be a money mule because they want to get more growth. Not saying anybody's done this, but I'm hypothesizing. And then you have a challenge around that if there's no liability, then why wouldn't I just originate tons of accounts with low controls?
So I think that's one consequence. So you could end up attracting an awful lot of potential money mules into your base. The other thing that's going to happen, I believe, is that banks are going to be thinking, well, there's a whole segment of my customer base which is suddenly costing me more money because I'm having to reimburse half of the money that they've been receiving from a scammed customer. Therefore, I'm going to look at people who are a bit like that, who have similar characteristics, and I'm going to either de-risk my book by debanking them, hate that term, but unbanking them, debanking them, or I'm simply not going to attract them in the first place. I'm not going to accept them in the first place. Now, what are these people? They're typically more vulnerable. They're younger. So we have this situation where the older people are normally the ones who are getting scammed. Sorry, that's a total generalization, and it's not quite accurate, but it's kind of more or less a bit like that. Or they're less well educated, or they're less well informed, or they're less financially sophisticated. Normally these are people in the lower social demographic. So those people who we should be protecting as a society. And it looks as if we're going to be more likely to be either de-risking our book by no longer banking the people who are likely to be scammed, or we're going to be de-risking by not attracting and not authorizing accounts for the people who are the mules. So we're having a strange impact here, I think, on financial inclusion. We go about saying we want to include people in the financial system. We know that a rising tide lifts all ships. We know that we know that if we bring them into the financial system, they get a bank account, they learn how to insure themselves, they learn how to manage their money digitally, and in due course, the standard of their living does go up. So there's a correlation between financially including people and their standard of living going up. We know it's the right thing. We know it's the right thing for the economy. I fear these PSR policies will have the opposite effect.
What about at the point of, and I kind of see what you're saying, and I think I want to explore the financial exclusion point even further because I think that this is a really important point. But just to probe a little bit further on this liability piece, surely the trigger event itself is a very large unexpected payment coming into account from a bank's perspective. That's actually what triggers any kind of let's hold this money, and then there's no loss potentially. If the receiving bank sees the large £10,000, let's just say inbound payment, and they say, "Oh, we think that this is now a money mule situation. We're going to freeze that account until we do what investigation we have in place." If that was a legitimate fraud, i.e. the fraud actually took place, they can give the money back. The money hasn't left.
You don't mean a legitimate fraud, do you?
No, I'm sorry. Let me use the logic. A bona fide fraud.
Yes.
A fraud that has taken place.
Yes, yeah.
So if it's a bona fide fraud, then you have that opportunity now to stop that fraud in its tracks by saying, actually, I thought this might be a mule, but I'm not going to exclude them from the financial system because I don't want to do that. But on the receipt of this large unexpected payment, I'm just going to stop it moving. Is that not a positive, or is that the...
Well, they could do that. They could do that, and then what happens at the end of the... What happens within the... If the person who scammed discovers they're fast scammed, reports it, within 5 days, the money is still there, so they just give the money back. That's possible. That is possible. Yes, I mean would that happen? I mean, how likely is it that would happen? Is the question.
I think a lot of the banks are looking at monitoring inbound payments as an extension of their current capabilities. Typically, inbound is looked at from an AML perspective, so it's batch. It's not designed for these kind of purposes. But I think a lot of them are looking at actually, can we stop the money going on?
So this is interesting. So, and Feedzai works for some of the biggest companies in the world, don't you? Do you think that this means to say that there will be a shift towards the smaller companies being unable to afford the sort of top tier tools, therefore will be less capable of spotting receipt of fraudulently obtained funds? Therefore, the scammers will be more likely to go for people with accounts with smaller companies. Do you think that's going to happen?
I think that could be a consequence.
So there's sort of there's a degree of protectionism here that's likely to happen, and we talk a lot about. I talk a lot about 2016-17, the Payment Strategy Forum. You might remember and the Payments Services Strategy that came out, and the wonderful thing about it was all about having a level playing field, trying to seek to bring in competition. We had a massive amount of investment in the fintech industry and the paytech industry in the following 7 or 8 years, and we're still enjoying the benefits of that. In a way, though, this counters against having a more competitive industry, doesn't it? So, again, unintended consequences could be the result of these regulations could be less competition in the industry. Now, by the way, I'm not anti-bank at all. Banks are big and active members of ours. I'm a big fan of a chameleon-like, multiple coloured, technicolored dream coat of an industry with multiple capabilities in it. But it's well known that bigger companies find it a lot harder to innovate than smaller ones, and a lot of the best innovations have come from smaller companies that are then adopted by bigger ones. So we've got to be very, very careful that we don't end up with a smaller industry, albeit with perhaps higher standards, because the big companies are better at preventing fraud, both in and outbound, and therefore the smaller ones suffer. Just got to be a little mindful of that not being the consequence.
Yeah, agreed. And it might be that the next wave of fintechs potentially have this built as a standard. And you're hoping if these are technology companies first, some of these smaller organisations, they do have the capability to themselves add some kind of monitoring in that.
They do.
And that's something you would kind of hope. I'm going to turn a little bit now to the reimbursement piece, because I think this is also an interesting angle. So now we've kind of discussed a little bit around the liability and some of the consequences that I hadn't thought of. So I think that's very positive. But in terms of, and I'll pose you this question, in terms of reimbursement and the consequences potentially that we could have as a result of that, does it change that much? Because we have the contingency reimbursement model. Most referrals to the financial ombudsman are in favour of the scam victim. If it's on that channel, more often than not, you get your money back on a scam. So you got into negligence and gross negligence, which is very difficult to just define. I'd like to get your view on what you think would be with the regulatory proposals. What changes? I think
there are 2 points of view, and I'm representing one of them stronger than the other. The first is that, we don't see a lot of consumers wanting to cheat the system. Most consumers are decent human beings, and as a result, I spoke to a different bank, to the one I mentioned earlier. Again, I can't mention the names on this occasion because it's personal conversations, but a different bank who said, we don't see a lot of first-party fraud, which is the term we use to describe when the sender and the receiver are in cahoots. And they've realised that if I send money and then claim it to be fraudulently obtained, I'll get the money back and you can keep the cash. So they say that doesn't happen very often. I think I think when you look at history, you look at the continuing uh, purchase protection insurance industry as it became, where there was a whole heap of activity with organizations proactively going out to help people reclaim their purchase protection insurance. I think you're teaching consumers that under certain circumstances you can ride the system, you can scam the system. And I think that if it becomes known among certain groups of people who are perhaps on the edge of the core respectable society, on the edge of the sort of people who are working for banks, they're unlikely to be in the social circles of the people working for banks, or people working for trade associations as well, that I think it's quite possible that we're going to get a whole wave of additional first-party fraud because people know, well, you know what? I think I'm going to go with paying this money to the girl in the Czech Republic because I know, my bank's phoned up and said, "Oh, am I sure that she's who she says she is?" And I think she is. It's true love. So I think I'm going to send it anyway because I know that if it goes wrong, I'll get my money back. It's fraud with a money back guarantee.
I slightly disagree on. Well, I don't disagree. I think it's more that I think contrary to that, to me it seems strange that if I'm making purchases on a credit card, and you mentioned that, I know I'm protected. I know if somebody steals my card or there's a payment that's made that's not me, I'll probably get my money back. You can do it via a chargeback or whatever mechanism you actually want to use to do that. Why is it then on this channel I won't, but I will on this? And this is something I think is a big problem for me, is that it depends on the way that the fraud takes place, depends on whether you're going to get your money back.
Yeah, no, I agree.
And that seems to me very strange.
And I think there is this dichotomy between guaranteed repayment on a card payment, a credit card payment that is, not on a debit card payment, of course. Mm-hmm. You know what? I think most consumers don't see the distinction. Most consumers don't see the distinction between a credit card and a debit card payment. Again, you look at the figures, maybe 30 or 40% do, but let me say 60 or 70% don't. They just don't think about the differences. And certainly for smaller payments, the number of times that you're going to get a chargeback or something being required is very small. Very small. So you then ask yourself, well, for bank to bank, do people know that money cannot be reimbursed under guarantee? Is there no guarantee of that? For most people, they're not that aware of it. However, we're not in a situation where it's guaranteed money back, which is pretty much what the policy now is going to be, with the exception of being grossly negligent. And I think, we've got a cost of living crisis. We've got a report just out at the moment, the figures as to what's going on in terms of people's lack of cash to pay for the basics. It's a tough place for most people out there, and I think it's getting tougher. So I think they're going to become more open to stories that they chat about down at the pub, where or on the chats about things that they got away with because it was guaranteed money back. Now, I'd love to be proven wrong. And by the way, I'm a compulsive optimist, so I really hope to goodness that I'm not going to be right on this one. But I think certainly the many people I've spoken to have said nowhere else in the world is giving an almost 100% money back guarantee. And I know that's not what it's called. It's called a contingent reimbursement guarantee. Yeah. But this is what consumers will call it. They'll call it guaranteed money back guarantee, or they call it 100% money back guarantee.
Yeah, I don't know how many people will actually be cognizant of the fact that it is. And if you're a criminal anyway, then you'll probably be like, well, this is another avenue that I can exploit. It is interesting that,
It is, because I'll tell you what, I'm on the phone to you and you say, you say to me, look, you know what? I'm afraid I'd love to trust you, but my bank's called me and said I should really double check that you are who you say you are. And I say to you, don't worry, Mike. Look, if the worst comes to the worst and it proves that I'm not the person that I say I am, at least you get your money back.
Do you know what? I kind of flip this around a little bit, and I think there's 2 points here. So number one, the advent of actually paying out anything on scams, and some of the countries that are looking at this are only moving to starting to pay anything. And historically, even in the UK, scams were not a problem because they weren't paid out. What you've actually seen, and let's look at this manifestation, is that as fraud evolved more focused towards scams because the banks spent money on defences and people, the typical account takeover moved away from and moved to more social engineering scams. The media and then eventually the government take note of this and say, actually, we need to come down on the side of consumers. How many stories have you read about somebody who's lost their life savings, basically? And I always get very upset by this. And actually what you've got now is, 6 of the UK banks, or is it 10, have already signed up to the contingency reimbursement models. They're already doing this, number one. And then number two, does this actually, because it's a loss that hits the banks, mean that they actually have to focus on the problem?
So there is a strong point of view at the PSR, which I concur with, which is this is going to make people focus on it. The trouble is that actually the people who are in the middle of the value exchange are outside the conversation. That's the big merchants, in particular the social media giants. And TSB Bank has reported publicly that 80% of its fraud is derived from exchanges of money that have originated through Facebook or Instagram. So they have to be at the table. So it's bizarre. The financial services industry is the industry that's seen to be culpable, in other words, at blame, taking responsibility for this, but actually they're enabled through another very successful, very profitable group of merchants called Google, Apple, Amazon, Meta. And so I think first of all, I think they should be at the table. The other parties involved, the telecoms companies that are facilitating the text scams, the text message scams, they should all be at the table. We don't have a whole system approach. The financial services industry cannot solve this problem on its own, because the water moves to the weakest part. This is what's called, somebody said to me the other day, fraud is like a raging river, and we're throwing a few rocks in. And it's not working. Of course it's not working, because the raging river goes round. Making money through scams is easy in comparison to many other frauds. We've got to make it harder. We'll only make it hard enough when we get to the root cause of it, when we involve everybody who's a party to the fraud, which include the merchants. And I think they're ready to come to the table.
Yeah, I think it's really interesting what you've just said, and I'd like to explore the social media angle a little bit further, and telcos and any other organisation that holds bank data or is an element in that fraud. But it's interesting you mentioned TSB, so I'll mention them now as well. They actually, on the reimbursement side, they announced that they were going to pay out, basically.
Yeah.
And they've actually reported that they haven't seen a noticeable increase in first party as a result of that. Maybe it's hidden, maybe they haven't detected it, maybe this...
Because it's going elsewhere.
Probably.
So listen, you're much too young to know this, but who do you know the first company that went to free in-credit banking?
No.
Okay, so Midland Bank. They don't even exist anymore. They changed their name to, in the end, they became HSBC. Yeah. And for a year or two, they were the ones who were standing out. Nobody else went to free banking. They got a whole heap of customers. The other banks were saying, we can't live without a regular fee for our banking. Who would ever have free banking? What a ridiculous idea. And they fought against it. And in the end, everybody succumbed. Similar things happening here. The TSB went first. They've got favourable press. They've probably been quite careful about their original customer base, make sure that they're in the right sort of... Then, remember, there's the victim, and then there's a mule. There's two individuals involved here. Maybe they have a customer base that's not representative of both of those two. Maybe they have particularly good. Maybe I don't know. Maybe are they a Feedzai client? I'm not sure. Maybe they're good at certain things, which means that they're less at risk. But there's no doubt that the others will be going there or as well. The regulators mandating it now, and therefore it's kind of the fraud will have to go elsewhere.
Fully agree on that front. And I like the water analogy. It's completely true that they just work out a way to make the money. It used to be carding. Then it became, faster payments are quick now. We can do it that way. Yes. Whichever's the least path of resistance that makes them the most money, they'll move. And I don't think scams will ever get solved, I'll be honest. I think
you're right. I think there's another dimension we have to remember. So not only have we got a problem because half of the people aren't at the table, but we're also moving internationally. Now, a few years ago, again, I'm not going to patronise you, but with your age, but I do remember when I first went to Spain with my parents in the 70s, you used to have to go down to the bank and order the money in advance. It took a week to get the pesos. Were they pesos?
Yeah, Spanish pesos.
Spanish pesos. And there was a maximum amount of money of cash you could take overseas, and sending money overseas was very expensive. I mean, it is still expensive in some circles, but increasingly the friction, the cost, and the settlement time are all coming down. So it's a lot easier to do this stuff internationally. It's a lot easier. So we're kind of, by the nature of our improving, increasingly innovative system, we're making it easier for the scammers to scam.
Yeah, and I think we'll come to crypto because that's a whole different game for that particularly. But I want to explore this ecosystem that you talked about here. If we think about the basically the type of, well, if we think about a specific fraud, there's lots of different points. I've always been kind of interested in the point of compromise versus the point of exit. So at what point does that customer get compromised? How do they get socially engineered? How do they get their account details harvested? How does that bar a breach? And then you have the point of exit, which is generally the final payment out of the banking system, whether that's cash being withdrawn or whether it's being transferred internationally, whatever it might be. And you have all of these different windows along this journey that you come through because it can be quite far. The point of compromise, as we talked about on social media, might be months before. It might be all these different might be something they're not even aware of, like a data breach or something. And actually, you're right on the financial institutions. They see one part of it, one part of this story that we see. So unless we start joining up data to get this, how do we actually try and understand this customer was compromised here, they were breached X, Y, then fraud takes place, and actually map this out? Because then if you try and tackle that problem holistically, then you've got alerts and you've got information. At the minute you piece it together at the end, at the point of exit, you'll try and work out what happened.
I'm so glad you said that, because this to me is one of the potential solutions that's been staring us in the face. If you've got a kid in school and he's answering back to a teacher, the teacher will chat in the staff room afterwards and say, Johnny or Sarah or whoever is and by the way, all Johnnies and Sarahs out there, we've got your number. All the, and have you experienced it? Yes, it's happening to me. Oh, blimey! And they join the dots. That doesn't happen here. There's no centralized pool of even identity. You don't have to know who they are. You just have to you need to verify that they are an entity, and so you can compare AB 446722 with AB 446722 on the other side. You put the two together and you realise that actually there's a pattern here. We don't have a centralised pool, and I'm keen on finding a way to building a centralised data platform. I know it's a huge ambition, but I think somebody's got to do it. And the reason we're not doing it is because the risk of being fined for doing the wrong thing around data is so great. Billions of dollars have been spent on fines through contravention of GDPR that everybody tars data pooling with the same brush. So everybody thinks, well, I can't do anything involved with sharing data in case I break the rules. And if I break the rules, I'm going to come. The regulators are going to come down with a ton of bricks. We've got to change that conversation, because unless I can identify the Johnnies and the Sarahs out there between different financial services organisations and different retailers, till I can do that, they'll just keep on turning the corner and going around to the next one. And there's lots and lots of people out there they can do this through.
Yeah, and I think tokenization probably is the answer to that. But then who does it?
It is.
And everything around that side of things come through.
So that's another big one. And I'm very keen on making sure that the regulators design a stablecoin regulatory environment that enables us to really have a complementary sort of digital money to the fiat that we've currently got, that allows us to do the track and tracing. Now, track and trace in payments, as you know, is simply about if you've got an identity at one end of the chain, the money moves through a series of other identities, and you should be able to track and trace where the money's come from or where it's going. Now, you can't do that with an account-based payment. You simply can't. It goes into one and another, and suddenly it's dissipated in the system and the money disappears. If it's tokenized money or a digital currency, then we have a chance to track and trace it. And the other thing we can do, we can program it so that that money is sent or received conditional on certain things happening. So I could, for example, send you, I could send to, and I'm only referencing romance scams because they're the most most raw and upsetting and painful things that happen to people. But somebody claims to be from a country, and you say, well, I'm going to send you this money, but it's conditional upon you meeting me at the airport and me putting my PIN into a POS terminal at Heathrow. So that would guarantee that the person has to do what's necessary to buy the ticket, come to Heathrow, rather than just taking away the business class flight from Guatemala or wherever they came from. Do you see what I mean? So let's innovate with the very nature of money, and let's enable the regulations to take place so that this whole problem of fraud becomes irrelevant, because everybody will know who sent the money, and if it's sent in under the wrong circumstances, we know where it's gone as well. So money laundering disappears and fraud disappears.
Yeah, and it's quite an interesting vision for the future. Definitely, if I'm a fraudster, I'm desperately trying to hold on cash, which is untraceable as long as I possibly can.
Exactly.
So I'd like to explore a little bit more about this ecosystem point and the other companies. So you think about authentication. The telcos never asked to be the authenticator for all the banks. They provided a service for you and I to communicate, and the banks have said, actually, that's a nice use for actually doing authentication, as the industry does. On social media, their whole proponent is to improve community and improve people sharing information. Whether they're sharing that information for nefarious reasons or for good reasons, another matter. And obviously there is the element of coercion and recruitment that goes on, particularly on money mules, on those. So if you think about all of these responsibilities, but ultimately the bank needs to protect their customers and protect their customers' money, because that's where the money sits. What do you think the role is of the telcos and the social media companies in this regard? Is it to provide information? Is it, I'll give you my little example. I don't like that I see paid for promoted, I wasn't going to say the platform, but paid for promoted articles that are basically scams. So if I go on a social media, I can actually pay to get my scam article or my recruitment article higher up the list and see more people. There's something wrong with that for me.
Yeah, there is. There's a challenge here, though, because in a way we understand in a capitalist system, people will do things that are going to generate a return on their investment. And we all know for years Facebook didn't make any money, and then it gently put ads on, and now it does, and Twitter's the same. Instagram is increasingly flooded with ads, and we have to realize that our eyeballs are the things that pay for the provision of the service. When the Facebook marketplace, for example, marketing manager looks and sees where his money or her money is coming from, they are unlikely to do what's necessary to validate to the 100th degree that this is an authentic company. I'm sure they do quite a lot. To determine that this is actually an authentic organisation and that it's not a scammer. But they don't do enough, because an awful lot get through. And I'm with you, it does annoy me. Yeah. And if you're in the industry, you can kind of tell who the scammers are.
Yeah, and I keep seeing the same articles about people with untold millions from quantum crypto or something completely fixed, using celebrities. You saw the deep fake that happened to Martin Lewis. And all
yes, that was Martin Lewis one. That was extraordinary, wasn't it? Goodness.
So leading into that kind of question on the role of these, do you think, and this is it, we talked a little, I think a lot of the conversation we've had is about the UK payments industry, the world watching to see, particularly when we're doing new things. And do you think, from a social media perspective, that we could end up like WeChat is in China, where Twitter is the payments vehicle, and now the banks aren't actually executing, they might be where the money sits, but the actual mechanism and the rails are actually provided by social media companies.
Well, that is a scary vision. Goodness me, I don't really want to give control of all of our payment networks to the social media companies. Of course, it happened in a strange way in China. I remember going there about 8 or 9 years ago, and just at the beginning of WeChat Pay. No, not WeChat Pay.
It's WePay, isn't it?
WePay.
Yeah.
And people saying, well, we don't have a point of sale network here, but we have lots of phones, so we're going to use this, the QR as the recognizer. And it happened very, very quickly, but it happened because the government wanted it to. Now, remember, there's almost no KYC, almost zero KYC. So there was a flood. Within a year, they had 700 million customers. And then what they did is they built on the back of, and that was built. Secondly, that was built around a social media platform. So they had lots of people who were signed up to WeChat, but there were not Alipay. It's Alipay, and there's one other one.
I think it's WePay, isn't it?
Is WePay.
Yeah.
So in a way they had a head start, and they also had the regulators with their hands off the tiller. Then the government discovered that actually this was a great platform for controlling how consumers spend their money. They launched the digital yuan on the back of it, not just because they wanted to control the consumer's spending power, but because they knew that this was an exportable currency. So this was a digital currency that could be used regardless of where you are. And you should see even just now what's happening. You're seeing places like Kenya being encouraged to accept the digital yuan as a medium of tender, as a replacement for their local currency. Now, if this isn't colonialism by the back door, I don't know what is. We used to do that in the UK. We called it building the colonies. We used to let people use our money. And a lot of these countries still have their own pounds, for example. We're not doing that anymore, and rightly so, because it's wrong to do that. The Belt and Road Initiative from the Chinese, which is the backbone of trade across the world from Europe through to China, all of the stands and all of those other countries have received huge volumes of debt funding from the Chinese, and the condition upon which they're being returned those debts is that the digital currency of the yuan is being adopted. Now, if that's not a scary thought, I don't know what is. So I think the risk is not so much that we'll end up with the social media companies being the backbone of our payments infrastructure. It's that the Chinese currency becomes that.
And that is interesting.
And you didn't expect the conversation to go there.
No,
but you didn't.
Really didn't. But I'm also thinking previously it's probably in dollars, and now that's the threat is actually from a geopolitical perspective that they're looking at selling goods and selling commodities and actually asking people to pay not in dollars anymore, but in the digital yuan.
It's de-dollarization.
Yeah.
That's a silly phrase, but that's what it is. It's replacing the dollar with another currency. If it's another fiat currency, all fair dues. That's all about where the dominance of the dollar comes from.
Yeah.
But if it's with a digital currency, where the issuer of that currency is in another country who knows exactly where the money's moving from, and where it's moving to, and what it's spent on, and when, and where. Now that sounds a little bit Big Brother to me. When I transfer money through the international network of correspondent banks, it often goes into dollars. I know actually as a person transferring that money that it's likely to go through New York at some point. I know that that's part of the system. That's one of the controls we've got actually, is that we know that the money, that's where Danske Bank, that was badly done with a branch in Estonia that was responsible for trillions of dollars worth of money laundering, was eventually caught out because the money all went through New York. So that in itself I think is an interesting picture. But if we were to be doing it with the digital yuan, which remember is programmable, track and traceable because it's digital currency, the risk of us losing control is much higher than we think it is.
Yeah, and I think it's quite dystopian in that kind of view, but I think it's kind of made me want to sort of bring back a little bit to the UK, but just kind of a little bit thought around this. And this is the role of networks. So we're going to get into cryptocurrency shortly, but I really are. If you actually think about the UK faster payments network, obviously Vocalink have that, and then there's challenges kind of going around that. They've kind of they've built a mule model and they've tried to look at that. What do you think from a payments infrastructure place? And now let's take it away from cards, because we know what the schemes do in that kind of space. What do you think is the role of the network in taking some responsibility or helping the problem? Because they see everything.
I do know what you mean. I think that it's difficult because open banking has not been set up as a scheme for which you pay a fee for a transaction. It's been mandated that payments are free, unless they're a premium API, and even data calls are free. So we can understand why it's been set up in the way in which it has been, and certainly under Marion King's leadership at Open Banking Limited, I think we're going to be seeing a new commercial model designed and a new set of governance around this as a result of the Joint Regulatory Oversight Committee's initiative and the good work they're doing in the background, and which I admire. I think when we look at what the consequences are for bank-to-bank payments, account-to-account payments, where there is no similar sort of reimbursement scheme, it has. If we're going to guarantee the reimbursement, it has to come from somewhere. PSR said it's going to come not from a big collective pot, but it's going to come from 50-50 split between the issuing and receiving account issuer. There's some upsides and some risks attached to that.
Yeah, because if I'm a merchant, particularly, maybe I'm getting upset with Amex or MasterCard or Visa fees associated to it, but actually I want to push that I want to do PISPs as my primary payment method. For the consumer, that's bad because they have none of the protections they would have had before. They have no chargebacks, and the point when you click send, that's gone.
We do need a chargeback dispute. We need a dispute mechanism for open banking. It's missing. I don't know why we haven't got one. We need a more competitive directory management system. At the moment, it's all done by Open Banking Limited. I think it should be in the open market. I think we need some means of insurance, which at the moment is this contingent reimbursement model. Is that good enough for the consumer? I don't know. It doesn't cover everything. It doesn't cover erroneous transactions or things I've made a mistake on. I've pressed the wrong digit. Yeah. I do think confirmation of payee has helped. And that's a great innovation, and other countries are looking at that as being a great innovation, but it's not in itself enough.
No, I think I always try when I think of COP, confirmation of payee, what percentage is stopping people with fat fingers like me who type the wrong sort code in, and versus the name, versus actually the fraudsters making it more complicated. I think fraud did move away from the COP organisations when it first was introduced. But as with anything, it just means the fraudsters adapt their MOs, and they adapt to say actually they give the right name of the mule, or they say they put some more information around that. But yeah, I think again do you think there are more services the networks can potentially offer banks and therefore ultimately consumers in terms of saying, well, I can see that this mule account has been dormant for 6 months and 5 different banks have paid £100 into it in the last 30 minutes. I'm going to tell those banks, and maybe we can get to that point of stopping that payment.
Yes.
Because they have that view.
That's the sort of thing we will be able to do when we have a whole system approach to solving the problem, where we have a centralized data platform that allows us to store information about senders and receivers, to have something that's some sort of intelligent, I dare say, I would not say artificially intelligent because that's kind of a technical thing, but although it's very popular to talk about that. But there's a whole heap of stuff you can do to help to anticipate and predict and then ultimately prevent these things happening. We're not doing it yet. I mean, we talked about this as a community 7 or 8 years ago. We talked about developing a centralized KYC repository, which it seemed like a great idea. And I know lots of people have been trying to do it, but it hasn't happened yet. And we've really got to crack it. We've got to crack it, because without that, we're really relying on iterative small changes made independently across the industry, and everybody does a little bit better, but nobody does well enough to make a big difference. Or we wait until digital currencies start to become de facto. And this is an interesting scenario. So if I know, Mike, that if I pay you money by my digital sterling. It's a stable coin. It's backed against money in the Bank of England through a settlement account that is there. It might be run by a commercial bank or another financial markets infrastructure. I don't know. I send you that money, and in fact, you say to me, "Look, I'm legit," and I say, "Well, look, I'm actually going to pay. I'm going to pay 1% premium on top of the sending of the money, just to be sure that it is actually you, and if it's not, I can guarantee to get my money back." Say that scenario existed. Now, would I be prepared to do that? Yes, I probably would. So I think we're going to move from the cost of paying coming out of the £100 I'm sending you, which is normally, what's it called, a commission or something like that, to being a fee on top. And I can do that because it's programmed. And that is an interesting thought, I think, is that in the way in which if I'm sending £100 to Africa, to somebody in Africa, I pay £110 for that, and the £10 fee is the cost of sending it. I think increasingly payments are going to be made with certain programs attached, and I will pay for the program or the programmability.
I've sent some crypto money between two wallets. I used two exchanges, and I tried it out. Because I wanted to move from one exchange to another because for whatever reason. And I'm not talking big money here. I'm not some kind of crypto fiend. I'm talking a few $100s.
Yeah.
And it was a realization moment for me when I sent the money from one exchange to the other. And I read it up on Reddit and I was like, okay, if you put it in this currency, which was XLM, it's called Stellar, you pay a flat 15 cents regardless of the amount. So I sent it from wallet A to wallet B, and part of the reason on the exchange had less confirmations. So on the blockchain, Bitcoin you had to have a lot of confirmations, i.e. people vouching for this transaction.
Yes, yeah.
I think it was 15 for a Bitcoin.
Wow.
And this one was 1 and Ethereum was 7 or 8. I can't remember exactly.
Yeah.
And that was around the exchanges, not necessarily Bitcoin and then Ethereum itself. So I took it and put it into this thing. I sent it, and within an hour, the money had gone through. And there was a realization moment for me at this point when it came to remittance that I could have been sending this money anywhere in the world. I could have been sending a couple of $100s, and I obviously did a tester transaction. I sent £1 to start with, paid 15 cents for £1.
Yeah.
I sent 15 cents for sending a couple of £100, but I could have sent 100 million and still paid 15 cents.
Yes, extraordinary, isn't it?
Anywhere in the world.
Yeah.
And regardless of what you think about cryptos, and I think the investment side is there's a bit of shilling and there's a little bit of fraud that goes on in those currencies. From a remittance perspective, that blew my mind a little bit. That I was like, I know how hard it is to send money internationally, and I know there's fintechs, who are disrupting that kind of process, and they're making it easier and better facilitate to do remittance. But I could have sent that to anyone. I could have sent that to the Guatemalan farmer.
Yeah.
I could have sent that to anyone. And it doesn't matter, 100 million
and you could
or $10.
And you could have cut out the big companies like the Western Unions as part of the process. You would cut out the correspondent banks. You would have cut out the central banks. It would have just gone from you to the other receiver. And so why don't we look at that? Well, of course we are. We were in Parliament just the other day talking about... Now, this is a bizarre idea. Anybody listening to this will fall off their chair and say, you can't possibly do that. So we, I think, have a problem in this country whereby we have this extraordinary legacy around the Commonwealth. These are countries who, largely for reasons of heritage and tradition and history, are associated with our current country. We don't own them, but we are connected with them in one way or another. They each individually have financial problems, typically around accessibility and availability of money. They normally have to go and get it from dollars. And so the big idea is that we potentially could set up a series of local stable coins, each in one of the 55 or so Commonwealth countries, that can be cleared and settled centrally through a Commonwealth currency. So anybody sending money to Jamaica or to another country from a country such as ours would, rather than pay 3%, will pay 0.01%. Because essentially that's all it costs to move the money up onto the up onto the next level and down. So why don't we push that?
I'm going to try and bring this back to money, mules, and fraud, because this is this is really interesting, and I think there is a good point around this. And a lot of people would expect that because the blockchain is visible And you've got to assume there's some kind of KYC control on either side because it's
Especially
sender and receiver.
If we've got a digital identity or some identifier, yes, I completely agree.
Okay, so to build this system that we have,
Yeah.
number one, let's break this down. We need to have something, a digital identity, a sovereign identity, effectively, that will allow me to say this is me. Because when you think about fraud and authentication, it's always the question: is this you? Yes, this is me.
Yeah.
So I put this thing together, so this is me.
Yeah.
Then and that needs to be validated on both sides of the
Agree.
channel, on the sender and receiver, because otherwise I have a fraud problem that it may be me, but I'm getting scammed or I'm getting an account takeover, and it's just going anywhere else. Then you need a blockchain or some kind of something that allows all of these records to be captured. So anytime I send money, whether it's my $1 or my $200 between these wallets, that's kind of captured.
Yes.
And then the third component is that you need to have somebody looking at this. And somebody not just validating the transactions, but looking at the whole thing.
And kind of authenticating that it is legit. Yes, you're right. You're right. But that can be done automatically. That can be done with a system. Feedzai could build something like that.
Yeah. And I quite like this, but I still think there's going to be, to be honest, when there's money and there's movement of money, there's always ways to defraud it.
Yeah.
And that's what I haven't quite in my head grasped how you do it. Yeah. But there's no such thing as a fraud-proof system, and I don't think there ever will be.
No, I think that's realistic. I think that's realistic to say that. It's a bit depressing, but it's realistic. However, at the moment, when you're sending money from here to Cambodia, it goes through 8, 9, 10 different counterparties. Mm-hmm. That's not a good system either. So the system we might be able to design should be cleaner, should be more transparent, particularly if we can trace where the money's come from and where it's going to, because it's tokenized. We can attach an identities to it at different stages, so we know who has had it on the way. We'll see where it came from as well. I mean, I might, for example, want this money only to be used to paying farmers. And that's one of the characteristics. You can only take the money and convert it into fiat in your local currency if you're a farmer.
I think this just actually shifts fraud from the banking system to this crypto exchange. Because I was just thinking, if I'm the mule herder or the criminal guy, and I'm holding a gun to a villager's head, saying, "Give them your details," and then I've socially engineered, "You need to donate charity money. Let's do it as a charity."
Yes, yeah.
There's this Cambodian farmers organization that you need to send your money to. And on the other end, I'm saying, this is legitimately opened up account. They've used all the KYC controls, but I'm going to have that money. So you send the digital cryptocurrency to this mule in Cambodia. The fraudster says, "Okay, now let's go to the ATM. I want the cash." Takes the cash out. You go, "Okay, that was me who sent that transaction. I didn't mean to. I've been scammed. I want to try and get the money back, whatever it might be." You've got the same problem, haven't you?
Yeah, you should be a fraudster.
You come up with a new system.
You've got to way around everything.
Yeah, you come up with a new system. I'm going to try and break it. That's probably more my philosophy around these kind of things.
Yeah.
But I do think there is crypto is here to stay, and I like what you're talking about with the government-backed stable coins. Pound is a pound, or digital pound, or whatever it might be. And I do think that will give you, particularly on a money laundering side, having that scrutiny there will be fantastic. So I'll ask a question. Do you think the cash will go away?
So that's interesting. It depends on whether you're referring to cash or digital cash. So I think
Physical cash.
Physical cash. Well, it's being used much less often for payments. There's still a lot of cash being taken out of taken out of ATMs. There's still a lot of money being sent internationally from cash through the banking system to cash at the other end. So it's becoming increasingly less commonly used. Will it go away? I think for payments in time in the more developed countries, yes, I think it will. There'll still be times where you want to be having your expenditure not attributed. There's still a desire by a lot of people to avoid the tax regime, so HMRC will come down on anybody who does this, but if you take money for a payment for goods and services in cash, then unless it's a personal purchase, then it will be part of your. Have to be declared as income under tax, and more people are being taxed at 30 or 40% now. So there's increased incentive to avoid the system. So there's the grey economy. So there is still a demand for it, but less so for payments. Less so for payments.
So let's bring it back to, like, we've had this question, bring it back to financial inclusion, because that's another very key point. Because if you're going to move away from using cash, are you going to effectively create an underbanked or a financially excluded group who haven't got access to that financial services, and you take cash out, then you've got an even bigger challenge. How are they going to buy their pint of milk? And so I think this is a really important point, and I think this is kind of consequences of. We move things towards our, more digital side of things. You have an unintended consequence of more people who are financially excluded because not being able to access the goods and services that they require. You have an impact that potentially, by making mules stricter or making your risk controls around mules stricter, you potentially can have financial exclusion. So there's kind of this whole kind of situation where we do want to prevent this. But how do we actually get this balance of actually saying we want to tackle this problem, but we don't want to do it in a bad way that leaves people without access?
Yeah, the point you've raised is one that our industry has been angsting over for years, because we know that it's, traditionally people find it easier to manage their money if they haven't got a lot of it, if it's in cash. The solution isn't necessarily to continue to promote the use of an old, outdated innovation. So let's not forget, cash in itself is an innovation. It didn't used to exist. The idea of having a single currency is also unusual. There were multiple currencies. You had your village currency, and you had your county currency, and then your country currency. And then in time, things have been replaced. So in time, we will replace physical cash, and we have to bring people with us. And I think the answer isn't necessarily to encourage them to carry on using an outdated innovation. I think our role is to first of all design products and services that are right for people who are financially excluded, for whom it's not a familiar thing, make it easier for them to get the same sense of control and responsible money management skills that they would have with cash as they do with a digital mechanism. Then educate them. So first of all, design. Secondly, educate. And thirdly, capture. So if people are in trouble or they're finding it difficult, then make sure they have availability of cash. Now, the real question is, do we mandate that cash should be accepted everywhere? So is acceptance required? So many shops now don't accept cash. You go to some countries, Sweden, Norway, where was I the other day? Amsterdam. These places do not accept cash. A lot of them don't. So if I'm preferring cash, even if I prefer cash, I can't buy anything with it. So should we mandate? And I don't know the answer to that one. I kind of, a bit of me says the best way to get people to learn how to use and learn how to control their spending through digital digital money is by making it, kind of forcing them to. But that's also a bit Machiavellian and propagandesque. So I must say I don't really know the answer here.
Yeah, and having worked in a few of the banks, I do remember this topic keep on coming up. How do we build a fraud-proof account type? And that was kind of the one that people were always trying to push. It's like, could we create a type of bank account so you can facilitate people there, but if we think they're high propensity to be a first-party fraudster or a money mule or whatever it might be, can we create a fraud-proof account? And I think they always failed.
Well, you can also not make it. You cannot mandate that cash that somebody carries around can't be stolen. One of my friends was at coming back from a Pride march the other day. His handbag was stolen. It had his mobile phone in it and 500 quid. Now, what he was doing with 500 quid, I don't know, but the whole lot went. Now, there's no technology that can prevent that. Well, I mean, maybe, I don't know. Certainly by not having the notes, not having the money as cash would have helped. Mm-hmm. No, I think there's no guarantees that we have all the solutions. I do think we need to work on having a whole system approach, getting the merchants around the table, being very, very careful about this 100% cashback guarantee, and the 50-50 liability split. And I think our industry is happy to contribute to that debate very actively, and start to measure and track and measure and kind of demonstrate and report on what's working. And if it's not working, then make sure it's changed.
Yeah, I think we're kind of dealing with the consequences of, and it's kind of interesting. I often ask the question when it comes to scams and money mules, should we delay more payments? We've kind of in 2007, when we introduced faster payments, it was customer experience at its core. That was quite revolutionary at the time. But are we dealing now with the consequences of the actions that we can't delay any payments?
But we will be able to. We will have to. So as a receiving bank, if I think that this is money that's an unusual pattern, then of course I'm going to block it. It still will be eligible to be your money, but you can't use it because I'm going to lock the account until you've proven to me that this was not a scam.
Yeah, because you don't want to pay that amount of money out.
Now, do consumers start to lose trust in the system because they can no longer be sure that the money is guaranteed to be sent? Then the answer is yes. So unintended consequence. This is why this fraud is kind of riddled into our system, and if only we could just get rid of it. But it's getting rid of it is a much bigger game than just this.
I don't think you ever get rid of it, in my opinion. Because,
well, your job's safe then, mate.
Well, yeah, that's the career that I've planned. But yeah, it's kind of fell into this. There's a
Machiavellian background here, which is that in fact there's a whole compliance and risk management industry that's here to condone and support the existence of fraud, without which you would be without a job.
Agreed. But for me, it always comes back to the stories that you read where people lose their money. And that, for me, is the fundamental.
Yes,
I don't like reading these stories. And I'm not naive enough to think that fraud is not paid for by everybody else. And everybody pays for fraud. It's a cost of doing business. The reason I have fees for certain things are covered by the fraud from that perspective. I'm not under no illusion that you're just stopping it and that preventing it. But having met people who've dealt with the consequences and the psychological side of things, in my mind, I think scams is the one that I want people to get paid out on, because for too long they weren't, and it was often big amounts. You look at the average scam transaction value of the fraud compared to an account takeover; it's so much bigger. I don't want to hear about people losing all their money. So for me, I'm always going to think this is a positive movement, and I do want to draw a parallel with the cards, with credit cards, because as that consumer protection evolved. Maybe we're just going through the same evolution on faster payments.
Are we prepared, if it doesn't work, to go back?
No, you never go back.
So we're prepared. So are we prepared? If it does nurture and encourage first-party fraud, if it does change people's consumer behaviour so they're much less wary about sending money to potential scammers. In other words, they say that they're told, well, don't worry, because if I'm not who I say I am, you can get your money back. So that's a great, are you saying that if those risks do come to light, that you're not prepared to unravel it?
I think the majority of people will not. I don't think I think there will be an uptick. Don't get me wrong. I think there will be an uptick in first party, but not enough to move the needle compared to what the losses are in the industry. I think it'll be small.
I hope you're right.
And I think there will be a small uptick because the fraudsters will actually treat that as an angle. But the vast majority of people don't want to have their money lost. They don't want to have to deal with claiming back from their bank. It's hassle and it's stressful. And even if you know that, the fraudster told me I'm going to get my money back, would you trust them with £10,000? They say, don't worry, mate, you'll get your money back from the bank. Everybody pays out these days. Yes. I still don't want to be defrauded. Because I might need that money tomorrow. I don't want to have to contact the bank. I'll probably worried I'm going to get blacklisted somewhere.
You don't think you're being defrauded. You think you're sending money to your love in Romania or whatever.
But then I guess if I'm that in love with them, maybe I would have made that transfer anyway. Then it gets into the point where I make the transfer because it's less risky. Does that mean that there's going to be an uptick in scams? I think scams can't get any higher, in my opinion. Even if you look at the latest UK finance numbers.
I thought it was me who was a compulsive optimist.
No, I'm an optimistic people. Scam value went down 17%, which is the post-pandemic point.
Yeah.
But the cases went up 7 or 6 or 7.
True,
So more people were scammed for less money. Which is worse?
Oh, I'm not sure. I'm not sure. The trouble is we're not getting to the root cause of the problem here, and that's the channels between the thing that brings the scammer to the victim or victims, whether it's the mule or the person who's being scammed. I don't think we're bringing them to the table. I think we should. And I think that's one of the things our industry's got to realise. Financial services can't do it on its own.
No, agreed. I completely agree on that. And I think there is, the banks always, and I remember this back in the days, is kind of like all these other companies have our data. They get breached and we have to pay back the customers.
Yes.
It's kind of a skewed situation where it's like, you're an utility company or whatever it might be.
Yeah.
You've kept all of my card numbers on your file and you've been breached and now I've got to pay out all these losses associated with it. Yeah. I don't think it's any different from cards, I'll be honest. I don't.
Do you think we need a scheme then for open banking?
For open banking, yes, because no merchant will ever push open bank. I mean, no consumer who knows what they're doing would ever use. For merchants, it's great. And but I'm interested to get your view on adoption, because psychologically, particularly for open banking, the whole of the UK population has been basically indoctrinated not to share their details. Do not share your bank details.
Yes.
Do not share it with anyone.
Yes.
Don't even share it with your family. And then suddenly we have open banking coming through. It's like, no, but you can share it with these guys, these third-party providers.
Well, it's
who have got, that you might or might not know
Yes.
are regulated and actually have those instances. So I'm interested for you to how long it will take from a consumer perspective to start actually trusting third parties to use my internet banking credentials to either recommend me new products or make payments. And I think adoption, I don't know what the adoption levels are like at this point, but I remember looking at the first couple of years and it wasn't particularly high from the consumers. From the fraudsters, yes.
It's still low.
Yeah.
It's still low. I'm reassured by a couple of things. I'm reassured by the fact that the public sector, which remember is 40% of all revenue or 40% of our GDP, they've recognised that bank-to-bank payments open banking payments are a very cost-effective way of moving money between constituents, and the public sector, between institutions and individuals. So they have taken on promoting the adoption of open banking payments as an alternative to card payments. So that's reassuring. They've taken that on as a strategy. So that's a big push that we're going to see in the way in which HMRC, they adopted it early. They've proven that it works and it works really well. They're now going to roll it out through the Crown Commercial Service. And they've just announced a big programme, putting £100 million behind this programme. So that gives me confidence, because a lot of it is about familiarity. Mm-hmm. And the second thing we're doing, of course, is we no longer have the 90-day rule that requires us to renew our permissions. And that's a differentiator with Europe. And the second thing is that variable recurring payments that are non-sweeping, and I hate what a silly industry we're in, non-sweeping VRPs. So if you're in the industry, you kind of know what that is. I think that's online payments that are repeated with the same merchant. Now I have with Amex payments at the moment, I have what's called a safe list. Essentially it's a safe list. I add this company who I've authorised to receive my money directly from my bank, to do so in future without me needing to go through the same authentication process. So it's much more efficient. Now we're just starting to tackle that. So the Joint Regulatory Oversight Committee has got as one of its 6 strands of activity is to address what this is, how it's going to work, how we're going to mandate certain contracts between different parties, and what the user journey is going to be, so that actually we can, and then the merchants will go, well, actually, although we've got to get the consumer over the hump the first time, and we might need to incentivize them to pay bank by bank. If they're a regular customer, then in future, somebody for whom I buy things regularly, whether it's in my case Lacal, which is a provider of cycling kit, or Blake Mills, which is a shirt provider, I don't then have to. If I'm then paying bank to bank, the merchant then has to pay 1%, 2%, or 3% less. They will be incentivised to the tune of 1% or 2% or 3% to push me to bank to bank.
Will they offer you that discount to you?
Very unlikely,
No.
but they will make it a lot more obvious that I should do that. They'll put it at the top of the list.
Yeah.
They'll put a little flag up that says, if you do this, you'll be part of my loyalty program. I think that's going to happen because the merchants will drive the consumer behavior.
I'm quite financially savvy and I almost have a hierarchy. So I kind of, and it's about consumer protection. If I can do it, I'll use a credit card. Then I might use a PayPal as a secondary.
But you're
the last one I would use would be an open banking.
But you're not normal.
I know. I've worked in banks.
You're special.
Thank you. It's nice to feel special. But yeah, I've also worked in banks for many years, so it's it's a different story than fraud. But
we're so much closer to it than most people are.
Agreed.
If you talk to most people, I mean, even speaking to my student kid, my young adult kids, I was trying to explain in Pop Brixton at 11 o'clock on Friday evening after several beers what authorised push payment fraud was with my daughter, and she just couldn't. She struggled to get a handle on it. It's like people do that. You mean there's an industry? Yeah. Oh yeah. Okay. Blimey. So it was unfamiliar, and she's been my daughter forever, as far as I know.
I've got two daughters, but they're a bit younger.
Yes,
but it is just kind of interesting. Like when you play the fraud game, it's always who's the victim, who's the fraudster, and that's how you can work out if it's authorised, unauthorised, first party, second party, third party. You can go impersonation. There's so many different definitions that you have around those points. I'm just going to go back on the open banking thing that I think is important. Something that I always thought was a bit, and I understand this, and I'd love to hear your assurance on this. Most of the third-party providers are kind of, they're comparison sites, or they're, might be a merchant if it's a PISP or whatever it might be. Isn't there a risk of them being breached with my login details to my internet banking?
Well,
it was bad enough with the cards from a breach perspective, but actually these days you can do a lot more with somebody's internet banking credentials than you can even with a card.
It's a good point. I would be mad to say that, of course, there's no risk. Of course, there's always risk. I would hope that because many of these companies are new, they've got state-of-the-art fraud prevention and data leak prevention mechanisms. I would hope so.
And they are regulated, so it's not a bunch of cowboys as well.
But I think what I'm pretty sure about is because the market is so nascent, I don't think, and because the products are still so young, I don't think we've seen anything yet in terms of what additional value will be provided to a regular user of open banking payments who has authorized an AISP to use my data to get me better products and services. I think that's going to happen.
I think what you'll see, and this is my little prediction, just like contactless, as they raise the limits, the amount of fraud that took place on that channel will take place. The fraudsters follow the money. And I think that's the unintended, we talked a bit about unintended consequences. I think of making open banking a more adopted process, it just becomes that's the new channel that they already are hitting it pretty. I know they've targeted open banking because they assume the controls are probably not as mature as the other channels, but I think it's following the money. Whether it's the new digital currency that we've talked about, whether it's open banking as a point there, just like Elliot Ness, the fraudsters follow the money.
Yes,
and they'll just say where it needs to be.
Yeah. No, you could be right. I'm hopeful, and it's my chance to be optimistic. I think I'm hopeful that the creative product people and the entrepreneurs are prepared to combine creativity with money to innovate in a way that makes more of the right customers buy their products and services using the intelligent data that they've gathered and analysed and therefore adapted the product to reflect that, either because the car insurance is more reflective of the security of the person's buying history, or because certain patterns in their purchase behaviour suggests that they're more likely to be susceptible to or interested in certain products, so they'll advertise more of a certain sort of product than another. And this is what we're just at the early stage of this, and it's the more visionary people, I think, are seeing open banking as a source of better quality products and services, and importantly, not just banking ones, financial services, pensions, mortgages, insurance, investment. And then outside financial services, when we move from open banking to open finance, and open finance to open everything, which they call open data, where your utility bills can be paid maybe the timing of your bills reflect when you get your salary every month, because it makes things easier. And there's all sorts of things that you can do if you understand people's spending behaviour. It's the ultimate customer relationship management dream.
Yeah, and I can't...
tailoring products and services to an individual's preferences and track record.
But it kind of flips both ways. I'll just on this point, and then I kind of go to the last topic I want to kind of cover off. That if the bank knows when somebody's salary is paid, if you're a merchant who does a regular, you take money on a subscription, wouldn't you like it if you took it the day after they got paid?
You would, yes. You would.
Wouldn't that be great if I could work out when this consumer is paid, and I'll make sure all of my subscriptions, whether it be for whatever it is, I'll have it the day after, because I'm more likely to get paid than the
one that's at the end of the month. That's quite true. That's quite true.
So I just want to roll this out a little bit. Because I've done some work in the US and in Canada and Australia, and it's kind of interesting. Zelle have gone down the approach with the liability of it 100% receiving bank, which I think is kind of an interesting way of looking at it. So it's only the mule that's going to take that.
Yeah.
Canada, obviously everybody's looking at FedNow, which is kind of effectively instant payments. And the number one concern is scams and fraud. In Canada, they're talking about the introduction of RTP, real-time payments. And obviously there's lots of concerns about money mule scams, fraud. And in Australia, scams are the prominent subject. So my question, if you look at the UK evolution of how things have evolved from a fraud perspective as in conjunction with payments, we had the story of 2007 faster payments, big uptick in mules, big uptick in account takeover. Banks tend to spend a bit of money on defending on account takeover, then moves towards scams. I'd probably say when I started working with a bank, I'd say about getting older now, 8 years, 9 years ago, 10 years ago, I could say 10 years ago, it was probably 50-50 between account takeover and scams. Now it's probably 90% scams.
Interesting.
And I think I'll get your prediction on this. My belief is that, do you think as other countries introduce real-time payments in its various guises, do you think it goes straight to where we are now in the UK, or they go through a similar evolution where it's taken 15 years to get to where we are now?
This is a really great question. I don't know. I would imagine they'll go straight to where we are now, because that's where they'll go where the money is easiest. And if this is where the money is easiest, and I imagine that the next generation or the new generation of FedNows is going to be included within it, will be account takeover prevention tools. I don't know, but I would imagine so. I would imagine state of the art meant that they'd kind of anticipated this problem, and they would kind of sort of write in a prevention of it. Wouldn't you have thought?
Yeah, I kind of agree. Yeah, that would make sense, and yes, I'm sure they're looking at that. And it's a challenge of, again, you're kind of getting into the networks there of kind of how much can a network actually do when they have such limited context of just seeing it's A to B in terms of the payment. You have a few details. How do you make a really good decision with such limited information? But it's kind of, so I'll kind of ask this last question. Do you think money mules are the consequence of real-time payments?
Without real-time payments, money mules would not be able to perform the role they play for cleaning the money through the system quickly. So the reason why it works so well is because they receive the money immediately and they can immediately pass it on. And it can be 10 or 15 steps down the road within half an hour. If it took 3 days to clear and settle, or 3 days to settle, then that wouldn't happen. So the answer is yes.
And I think you're spot on, to be honest. Having worked with a few banks where they got instant clearance with their own accounts, so they're sort of on me sort of accounts. So if I'm a Lloyd's customer transferring to another Lloyd's customer, it's instant. But if it's to RBS, it's going to take 3 to 5 days. All the mules are within my own 4 walls, because they're like, we're not going to wait 4 days for me to get my money. I'm just, there's too many opportunities for the customer to say that wasn't me, or that was a fraud, or whatever it might be. And there's 3 or 4 days for the banks to communicate. So I think it is the natural evolution, and it's just it's a consequence.
Do you think it was the unintended consequence? Do you think this conversation was being had before faster payments,
I don't think we
whereby
envisage-
people sat down around a table and said, that we've got to think through the unintended consequences of making these changes in the clearing system, and that we should be managing the risk and anticipating the risk of authorized push payment fraud, which also is a silly name. It's a silly name, APP fraud. Anyway, we know what it is.
Yeah.
I think what I'm trying to do now, and our community is trying to do, is make sure we are thinking these things through, so that we hope that you are right, that actually first-party fraud does not increase. But we have to anticipate it might do, and so that therefore we can measure it and monitor it in case it does. And if it does, we can do things necessary to either educate or prevent or punish those. We haven't talked at all about punishment today. The reason we haven't talked about punishment of fraudsters is we're so terrible at finding them. And once we've found them, we're so terrible at giving them a fine that prevents them from doing something, or gives them a punishment that prevents them from doing something, or they move on to the next type of crime. And so I really think it's very, very strongly our job here is to communicate with clarity and enthusiasm about what happens if. And if we have covered off what happens if, as far as we possibly can, then we won't be in the situation we are with right now, with faster payments resulting in a fraud problem. Let's not do what they do in the medical world, whereby 50% of the problems people have in hospital with bad health is created by the medication there to solve the reason they went in.
Yeah, and I think
that's a scary thought.
It really is. I think we are in a world where fraud is the predominant crime, but it probably takes a little bit less of the resources, and you hope that would actually rectify it, because economic crime, white-collar crime, or whatever you want to call it, is considered worse than burglary, for example, even though the numbers are so much bigger. And you're talking about something, somebody gets burgled, hopefully will have insurance. Even if they don't, you're not losing as much money as your entire life savings that you might suffer from a fraud. But yeah, this point about unintended consequences is interesting. I don't think anybody would have predicted that it would have manifested as scams, but they would have predicted that fraud losses would go up. They wouldn't know the MO. And that's what I think, the point here. First parties and one to kind of look at and to monitor, as you say. We have slightly different views. I think there'll be a small uptick to start with, and then I think it will settle back to normal, because I think the majority of the population they're not going to do that, and that's kind of because they don't want to deal with it, and not everybody's going to know, now I get my money back. It's not going to be,
we're not going to advertise it, are we?
No, exactly right. And how many regular Joes have heard about the contingency reimbursement model?
Yeah,
none of my friends have, certainly. That's already in place. But I just want to kind of, you've piqued my interest around the criminality aspect of it. Where do you think this kind of goes? Because we're so, as you said, we're so bad at convicting. There's some people who do some trying good stuff to actually get the rings, but you read about these cases, they are few and far between. When you read the actual victims' number of cases, even in the media, is huge. It's just probably 10 cases for every one conviction, or maybe even more. Maybe that just taps into people's emotions, that they're more interested in reading about these things. But what do you think can be done in terms of actually trying to solve the actual problem, which is criminal gangs that we discussed at the beginning? They have all these different channels. Fraud is probably one of their channels. How do you actually tackle that problem? Because it is international.
Isn't it partly about data sharing? It comes back to sharing data again, and the authorities making sure that if you do share data about somebody who you think has committed a criminal act, that you're not worried about having a data breach for which you'll be fined millions of dollars. There's got to be a collusion in the way in which the criminals collude. We have to collude. The regulators, the issuers and the receiver account issuers, the retailers. The authorities are involved here. The Open Banking Limited and others, and Pay UK. We haven't even mentioned them at all. They're a party to this. They've got the best data sharing capability, but they're not doing it. Hopefully within the new payment architecture that will be somewhere down the line. But I think we've got to think slightly differently, more creatively, less worried about being fined, and have the support of the government to make sure that we're not scared, that we're not too scared to collaborate.
Yeah, agreed. And it's just this balance of people having privacy, their data, access to their data, versus this imbalance of actually you want to have the transparency so that you can actually use it. So
Yeah.
I get the dichotomy of that.
You remember, though, at the beginning days of contactless payment cards, early days, the newspapers went, if you walk past somebody who's got a little payment reader and they touch, or they can get within 6 inches of your pocket, they can steal all your money.
No, that's wrong.
Do you remember that? It is wrong, but do you remember that was all over the newspaper? That absolutely put back adoption by 12 months.
Yeah.
But eventually the consumers understand.
I really want to say it though. I actually got interested in this when this came out, and I'm talking 2012. I think I bought myself a card reader.
Decade ago.
Yeah.
You went around trying to steal from
I
people.
didn't go, I know. I was
Mike,
curious.
You're such an you
No,
are the fraudster in
I was curious.
you're a
I got
wolf
a card
in,
reader
in
because
sheep's
I had
clothing.
this theory of, and I never thought that you could just steal all your money. But if I was on the tube, could I not just like hit everybody's wallets or get the contactless payments and do all of that? Some of it is offline. So I got curious and I bought a card reader, and I was interested to see what information you get on a card.
Yes.
And I realised it's pretty much everything that's embossed on the card, apart from the CVV number.
Interesting.
So if I could follow you to your address and just get the first part of your postcode, after scanning you, I would be able to go and shop on Amazon, because obviously they don't take the CVV.
Ah.
So you just need to know the first part, because the AVS check is just and this is me geeking out on this stuff, but
Yeah.
the AVS check is the address verification check is just the first part of the postcode, which could be N4 or N1, could be a few 100,000 people in that. So I just need to know where they live, kind of roughly.
Mm-hmm.
I'd have every information about from the CVV. I'd have the card, the PAN number. I'd have the expiry date. I'd have all the things you need to input in there. And that was and I was kind of curious.
Yeah,
and that was me.
interesting,
You know, this was
isn't it?
10 years ago.
I
But
must
that
say,
was
I didn't know that. Well, how much money did you make?
Yeah,
Clearly not enough.
Not enough.
Otherwise, you would have retired. And
Yeah, exactly.
You wouldn't be doing this interview with me.
No, I would be doing something else on a yacht somewhere.
Oh,
but
dear,
no. I just was curious. I was a very curious guy. So yeah, I think naturally I'm kind of thinking that this is actually we're bringing this to a kind of a conclusion. I've really
fantastic.
enjoyed this conversation.
Thank you so much, Mike. Thank you so much.
Really engaging, and it's really an interesting conversation. I've learned a bunch as well, and I like the way you've been bringing in lots of the policies and regulations and all the things that are kind of going on at the moment in the UK. I do think that the message to the people outside of the UK or the organisations who are worried about this, and I think particularly having been in the US and Canada, they are worried about this in a big way, the banks particularly, about seeing what's happened in the UK and worrying about what's going to take place. So I think everything that's going to happen before April 24, when the changes start taking place, people are going to be watching.
Yes. I'm sure they will.
Yes, I want to say thank you. Very good.
My pleasure. Thank you so much.
Yeah.
It's been a fascinating conversation.
Yeah.